Guys, welcome back to the channel. Welcome back to a new video. I first of all would like to start off with apologizing. I actually wanted to upload a video yesterday after the FOMC meeting, but then some personal stuff came in between, and then today I was busy with all kinds of stuff, so it's a little bit of a later video. We're going to keep it very briefly. If you like this quick updates, then please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment or share this video with your friends if you think that's useful. With that being said, tomorrow there will be a live stream, and then you can ask me all kinds of questions, and then we're going into the markets from left to right, from the depth to the highs, and we are going to discuss pretty much everything. Now I just quickly want to go over with a bit of a helicopter view. We had the FOMC yesterday. We spiked up and down, and we are right now trading below the value area low here of this smaller range for Bitcoin, but we are still above the value area high of this bigger range that we have right here. The value area high, by the way, on Bybit and other exchanges is a little bit higher, approximately 20k, but still the price is right now in the middle of the both ranges, so if we cannot reclaim this value area low very soon, then I think we are absolutely going lower. And no, I have still not opened a short position, although I said that I actually wanted to already a few times. Full disclosure here is that the first time why I didn't do it is that although we made a high here and we had a beautiful big bearish divergence on the 4-hourly, which actually should pull the trigger to go in short, but this was on a Saturday, and I thought we are going to retest it or take it out during the week and then go lower. So that was where I was waiting for, and we still haven't had it. This high right here, let me zoom in on the hourly, was exactly a golden pocket, but that was, like I said, during a FOMC meeting. And I was a little bit hesitant to take that trade. Matter of fact, it was actually this low right here. Let me see if it is correctly. Yeah, like this. So that was exactly into the golden pocket, measured from this high to this low and then back up. So this was actually a second chance if you have missed this. But this, like I said, was during the FOMC, and I was very much afraid that the Fed would start talking about kind of easing down on the pace of rising the interest rates and saying already, hey, you know what, this was the last 0.75%. We are from the next one on doing 0.5, and then we'll see from further on. But later on during the speech, we noticed that that was not the case, and we kind of went down here, and now we're kind of a little bit in this no man's land, where you could still say that we are still in a little bit of a bigger range here, but we are underneath the value area high, and it's just pretty quiet so far with the price action, but it looks very bearish. We have a high, lower, one time lower, but you could actually see that this here with the closure of the candle is again lower. So that looks very bearish. On the bull side, would you say that if we are pumping up, there are stops above every high? That means that if there is another pump, it could go very fast to take out all the liquidity above the stops and then go lower. That will be the ultimate FU scenario. But we have to say here that so far the price action is very weak. We completely miss the bull strength. Also, if I zoom out on the hourly, let me then go to this kind of deviation of where we are right now, then you're seeing that on this pump and everything we just completely missed the volume, so it's just very weak. For me, although I hope maybe for one more pump so I can get into a short, I think we have to face the facts and saying, you know what, this, let me actually zoom out to the 4-hourly, then it's easier visible. This was actually just a smaller deviation, kind of a big fake out on this price section here underneath. And if we would draw two boxes, then you would get something like, let me see where I have boxes, something like this. So this is then kind of one box right here with tops and bottoms, and then this is kind of your second box, and now it's a little bit of a make and break moment of, are we going to break through to the downside or not? I actually think that once we convincingly break or maybe close a daily just at or around sorry, just at or underneath 20,000, I think it's green light to go much lower. The more time is passing by, actually the weaker it looks. If we're just looking at the indicators, then we could say, you know what, this 4 hourly already spent quite some time here on a momentum wave. Maybe we get a bit of a push up to then go lower. Then we could still have a scenario of a triple divergence. It is still in play. Of course, it depends then on how fast can the price move up. If it takes a long time, then this momentum wave here will be much higher. But there is still a possibility for a triple divergence. Also, percentage-wise, I think it is still possible. It's not even actually that high to make that much to take a new high. Less than 5%. So I think that is absolutely possible in maybe 1 or 2 trading days. If we're looking at this was 8.5, almost 9%. But we should not be getting too greedy, and especially after yesterday. Then quickly to the dollar index. This is kind of where we left off. I said if you want to bounce, this is a moment to do so. That's exactly what happened. A little bit sideways, once a little bit spiked during the FOMC meeting, then just higher, and now at the 78.6. But, and let me clear up this chart, and like I said, I always like to do this when I'm recording these videos or during live streams, so that you know exactly what I'm doing and where I'm looking at. If we're putting it at this high, then we are exactly from the high to the low back to the golden pocket. To be honest, guys, let me also take out this falling wedge. Oh, sorry. Let me also take out this falling wedge because we're probably gonna reach the top, and that's right away to the point that I actually want to make. And that is that I think we are going to take out the highs. The trend has reversed again. This was just some sideways period, and now we're just going lower. Yeah, but Ray, we kind of broke here on the blue line. I also said it a few times already. The blue line is just bias. It's something that I draw in. It is not like super hard data, and once we break it, because everyone can draw these kinds of lines, and now we can just have sideways consolidation here and then just go higher again. But it was something to maybe take account of. I actually think that we're going higher, especially after the words of the Fed of yesterday. I will come there in a minute. Quickly then the S&P 500, what I would just want to show you. This is textbook. 1 tap, 2 taps, 3 taps to the high, lower. I think we are going to take out the lows here underneath 3,500, and we're going to make new lows this quarter for the S&P 500. Everything is set in stone. It's just not even that much anymore. Excuse me, a little bit less than 6%. I definitely think that we're going to make it. To sum up yesterday, Benjamin Cohen, he's a great analyst and a quant. He tweeted during the FOMC meeting, and actually all his tweets are just a perfect sum up of everything, of where we are standing right now, how the Fed thinks about the markets. So the dollar is strong. It's a challenge for a lot of countries, or some countries. So that's actually all the Western world and everyone who buys everything in dollars. We know what we need to use the tools to get inflation under control. The world is not going to be better off if we fail to do so. In other words, we are keep rising the interest rates until we have inflation down. We have some ground to cover with interest rates before we get to the level which is sufficiently restrictive. In other words, we still keep on rising the interest rates and live up to our mandate. There is no sense that inflation is coming down. I have a table of the last 12-month readings. We are exactly where we were a year ago. In other words, we do not see any cooling off of the inflation yet. In other words, we keep continuing what we're doing until we see movement in the inflation. The window of a soft landing has narrowed. This one for me was a little bit of a big one, because that just shows that they're changing the narrative. Again, we have talked about changing the narrative all the time. They are doing this a little bit on purpose. They're just doing it so that no one is running for the bank to get the money off, but they are on purposely changing the narrative as time passes by, so that everyone can get used to a crisis, high inflation. It's going to be bad, it will take some time, and that we're slowly getting into, because if someone steps up to the mic and says everything going to shit and we completely fucked up for the next 2 years, then of course there will be a big panic. So they're slowly changing the narrative with every meeting, in a very modest way. So you have to read a little bit between the lines, and that's why I find this line, this sentence that Jerome Powell said, the window for soft landing has narrowed, is for me probably the most important one. They said because the inflation has not come down. So yes, recession, we already knew it, but if you have been living under a rock, then of course 110% 10% we're getting in inflation, and stock markets will go down further, and inflation will stay higher, and they will keep on rising the interest rates. And because interest rates will keep on rising, stock market will go down, real estate market will come down, unemployment rate needs to go up at some point. The time to slow down may come in the next meeting or the meeting after that. So herefore, with this, when Jerome Powell said that, he's actually saying, you know what? Depending on the data that's coming in, because there's still unemployment rate coming out and the CPI data before they are going to do the next FOMC meeting, this could actually mean, you know what, if the inflation is still not coming down and unemployment stays low, we will probably start rising interest rates again with 0.75% for the next one. And that is exactly also what we see now for the next meeting. We have almost a 50-50 for a 50% basis points and a 75% basis points. Now, last week, or yesterday or the day before, I said I am leaning heavily against 0.5%, but I have to say, after the FOMC meeting of yesterday, I am also right now under 50-50. I want to see a little bit more data, and if the inflation is really not showing any signs of coming down, I think they're going to rise the interest rates one more time with 0.75%, because the meeting, the next one is quite close by. There's in approximately 3 weeks, but the meeting after that is, I think, almost 2 months. So I think they maybe want to hit it one more time with a hammer. Let's see what the data is going to be in the next couple weeks. This is the inflation rate. We already have been looking at this. Inflation is coming down a little bit, but the core inflation is still very, very high. This needs to come down. The 6.6 was a new high that needs to come down in the next couple months for the Fed, for them to maybe slow down a little bit in the interest rates hikes to maybe 0.5% or 0.25%. If else, I think they will just keep on hammering with the 0.75%. This is the unemployment rate. We also showed you that already multiple times. This needs to go up for the Fed. And people saying, yeah, but then something will break. Yeah, what will break? The housing market, the stock market, unemployment rate? It's not a matter of something breaking down. You want to cool off the economy, because if people still have a job, they have money to spend, and therefore they still have a house to live on. So you want to have some numbers to go a little bit higher. Like I said, housing prices going down, therefore the mortgage rate going up, unemployment going up to maybe 5-6%. And the stock market is going down because we are right now still at historical lows. And if we go to, let's say, 5 or 6, we are kind of at the average. So that will be a little bit more normal. Up to 8 and 10, of course, is way too high. But that is, of course, probably what the Fed is aiming for, 5 to 6% unemployment rate. Then today, last news, and this is also right away the wind up for the video. UK thinks there will be a long recession, and the Bank of England also raised the interest rates again today. It is a very clear sign, because the entire market was speculating and screaming for a pivot, and we are soon going to print money again. Central banks around the world have been, of course, talking to each other already for the beginning. That is nothing new, but they have been saying we need to stay very firm, very clear, very hawkish. The goal stays for everyone the same. Get the inflation down. That is all that matters. If not, and I've also sounded like a broken record, that's the end of Western capitalism. Then you completely crumble everything down that you have worked for in the last few decades. Inflation is one of the worst things there is for an economy. So therefore, they don't care anymore if your stocks are going down in your crypto, your real estate, yada yada yada. Inflation needs to come down. We'll see afterwards what we're doing. That is the narrative. Inflation, Fed, interest rate hike, and everything else is just tagging along. Alright guys, that will be it for now. Stay very, very cautious. Like I said, I am becoming more and more bearish. It doesn't look all too good, to be honest. I wouldn't be surprised if we get a dump very soon. I will do a live stream tomorrow, then we go into depth for all the data. If you like that kind of stuff and you definitely want to follow that, then please make sure to like and subscribe. Click the bell, click, and also you don't miss the notification when I go live. And then you can tune in. Of course, also feel free to follow this, to share this with your friends if you think that's useful. And then see you guys very, very soon again tomorrow in the next one. Bye bye.